Right, so we had, just kind of a little recap. So we had talked about how SUTA laws vary from state to state. Different states have different waiting periods for collecting unemployment benefits. Different states have different wage bases, different tax rates and tax rate ranges. So it varies significantly state by state. Each state, though, does have to have their unemployment program approved by the federal government. So each of those states, even though they vary significantly, they have been approved by the federal government. We also talked about how we talked about this experience rating and how the amount of utilization that a company has experienced with regard to turnover, people who have, and a company could have a lot of turnover, but if they don't have anybody that's applying for unemployment, as a result of that, that's not going to affect their unemployment tax rates. But if they do have a large number of previous employees who apply for unemployment benefits from their account, that employer's account, then that is going to drive up their rate. And we did go through that calculation, which ultimately we discovered what I had done wrong there. But we did go through that calculation for determining what the experience rating is. You've got that problem that you'll have to go through, and we kind of started looking at that. Employment history, reserve ratio, this is the homework problem that we went through, determining what that reserve ratio is, or the contribution rate based upon the reserve ratio. And again, remember that reserve ratio is essentially everything that's been contributed minus all the benefits that have been drawn, divided by the average annual payroll, gets us to the reserve ratio. And then most states will use that then to determine what the contribution rate is. And we saw that in that problem, that there was a table that we then utilized to determine the contribution rate based on that reserve ratio. There is the opportunity in some states for employers to reduce their contribution rate if they make additional contributions to their fund. And you can see if you play around with that reserve ratio, you can see how that would be the case, because what it does is it increases the amount of contributions. So the lower that reserve ratio, I think it's the lower or the higher. I gotta look at the formula here. So if this number is higher, then obviously it's going to increase our reserve ratio, which is going to decrease our contribution rate. So employers do have the opportunity to contribute more over and above what they were required to contribute in order to bring down that contribution rate in the future. So that is one of the options that they have. So employers, what they mean by this terminating liability, an employer remains liable for 2 years. That means that, for 2 years after the company maybe no longer even exists, they're still going to be liable for any unemployment benefits. So that can continue on even after the company is no longer contributing. If they want to terminate that liability, they have to file an application to the state in order to do that. Nonprofit organizations, so kind of an exception for nonprofit organizations, they do have the option to just simply pay the unemployment benefits, just pay dollar for dollar what the unemployment benefits that have been applied for by previous employees. So instead of having that contribution rate and paying that into that tax, they've got the opportunity to do that. There is this SUTA Dumping Prevention Act. What that does is it prevents companies from sometimes what companies will do in order to bring down their contribution rate. Remember, that's based on their history, past history of utilization. Well, companies would just simply terminate the company and then open a new company with a new unemployment number, with a new, as though they were a brand new company, in order to drive so that they get that preferential rate. And then they no longer have to, have the high rate because they've got previous employees who had filed claims. So they just shut down the company, open up a new company, and get a lower rate. So this SUTA Dumping Prevention Act addressed that particular issue, making it illegal for companies to do that, to pursue that. Does that make sense? Yeah.
So for the contributions, how do you know, or how do you tell if how much has been drawn out from a company or from an employee?
So the contribution rate is actually going to be established by the Unemployment Commission, the state unemployment agency. So they're the ones that would have that information. I don't know if in the state of Iowa, if companies get notified of how much has been drawn. They probably are, and I never had any experience with it because the companies that I worked for, we didn't have anybody that quit and then drew unemployment. So I don't know exactly if companies are notified when, I think they are, when somebody is drawing unemployment, because companies have the opportunity to appeal it. They can say to, the unemployment agency, no, that employee quit on their own, or they were fired because they had repeatedly violated these company policies. Because there are requirements placed on the employee as far as their expected behavior for the employer. You can't just intentionally get fired in order to go then draw unemployment. But that information that you're asking about would be kept by the unemployment agency, the state agency. And then employers would be notified when somebody has applied for unemployment against their account. Like I said, to go ahead and appeal that if they want to do that. Does that answer your question? Yeah. So, but the rate itself is going to be set by workforce development in Iowa is the one that sets the rate. So they have all of that information. If an employer disagrees with the rate, then they could go and get how did you calculate this? How did you determine what this rate is? But the employer themselves doesn't set that rate. They can maybe guess approximately what it is. If they haven't had anybody draw unemployment recently, then probably their rate's either going to stay the same or maybe even go down a little bit. Okay. All right. So we talked about the rates, talked about FUTA, that 6% rate, and the credits against that tax rate, the maximum credit being 5.4. So it would bring that tax rate down to 0.6%. That is just for FUTA. Talked about SUTA, how it varies from state to state. And in your problems, it's going to tell you, it'll tell you maybe what state they're in, and it'll give you a rate. So you don't have to, the only time you determine it is if you're figuring out that reserve ratio. Any problems where you're figuring out that reserve ratio. But now, so we know how and we know that it's only the employer, at least in the state of Iowa, only the employer is paying those taxes. Now for FUTA, it's always only the employer. In most states, it's only the employer that is paying those SUTA taxes as well. There are a couple states where that is an exception, where employees may contribute a small part. But the employer, once they've collected those funds, just like with the income taxes, federal income taxes, Social Security taxes, Medicare taxes, those funds then have to be remitted to the IRS FUTA as well has to be remitted. I started talking a little bit about the schedule for deposits of FUTA tax and how the employer does not have to make a deposit until they reach a liability, an annual liability of $500 for FUTA taxes. And then at that point, they have to make deposits every quarter until the end of the year, and then it all starts over at the beginning of the year. So just like with the 941, the federal income taxes, Social Security and Medicare taxes, we've got a deposit schedule and we've got a reporting schedule. So for FUTA, we have the same. The reporting schedule is just one form a year. And it happens, it is the due date for it is January 31st for the previous year. It is called the Form 940. So kind of easy to mix that up with the 941. We're just one digit off. But that Form 940 is the form that is filled out by employers once a year, due by January 31st, even if they have to pay every quarter those FUTA taxes. Even if they have to deposit them, they still only have to report it once a year. Okay. So if timely deposits have been made, they actually have until February 10th, but I think most employers try to get it done by the 31st. We've got other deadlines on the 31st, so why confuse things with a completely different deadline? So January 31st. There is a schedule that gets attached, and we'll look at the 940 here in just a minute. There's a schedule that gets attached to the Form 940 if the employer reports in multiple states. So, and you'll see on it's called a Schedule A, you'll see on there that there's essentially, well, every state is listed there, and you have to indicate what your total payroll was in that state and the taxes that are due in that particular state. So, and like I said, we'll take a look at that. Okay, so where do they get mailed? The IRS, there's always, the IRS is kind of funny. They have all these different offices all over the country where different forms get filed. And if anybody has filed income taxes before and maybe has did it in the day when we mostly had paper returns, you would have noticed that address seems to change all the time. Sometimes we would send our tax returns to Kansas City. Sometimes we would send them to Austin, Texas, sometimes to Ogden, Utah. Like they've got all these different locations, and it seemed to change almost every year where you were sending your form. Well, there are, these forms are usually still filed on paper, and there's a listing of where those forms get sent in the instructions to the form. It would depend upon the state that you are sending it from. So companies in Iowa may send it to a different address than companies in Illinois. Usually doesn't have one particular address where those come from. You can file for an extension of the time to file the return. By the way, almost every IRS form, you can apply for an extension to file the form. You can never file for an extension to pay the tax. The tax itself is always due. They want their money, right? They want their money. They want their money when they want their money, just like the rest of us. So there's never any extension. If a company is late in paying the tax, they will be assessed a penalty for it. But if you file for an extension, what that does is it gives you additional time to file the form without incurring a penalty. 940s, usually in my experience, those rarely are extended by companies. They're fairly easy. You'll see when we look at it, it's less cumbersome than the 941 form is. But there is an extension that's available, but you have to be given special permission by the director of that particular district. Now, this one does not have a 940X. So just one more rule, one more outlier here. If it's an amended form, you just put amended at the top of it. Mm-hmm. Okay, so I know, I don't know why that is. Some of them are C, some of them are X, some of them nothing.
Would you say that those don't exist in an electronic way, or they do now?
Most, I don't know of any companies, at least in my experience, that filed it electronically. I think it's pretty much all paper. Unless something has changed in the last year or two on that. Usually those would be done just on paper. Like I said, it's not as cumbersome a form as the Form 941. So if a company terminates doing business, so they go out of business, whatever, they still have to file a final return, final 940 return and that lets the IRS know, don't expect to receive any more of these returns from us. A lot of times payroll service providers will be the ones that are filling these out, just like the 941s, unless the company has an internal payroll department that has responsibility for those ADP, Paychecks, those types of companies will fill those out for employers. I'm not going to go through all of this because I want to actually show you what the form looks like here. So, 40. Sorry, she's trying to figure out the Cengage issue. Let's see. Okay, so this is the form 940. Again, all this information is same as that 941. Over here, so they do have a checkbox now that just says amended. In olden days, they would have to write up there. But so if it's amended, successor employer, what that means is if you've purchased, one company has purchased another company, but they're keeping the same employees. So maybe when that happens, oftentimes the company will get an entirely new employer identification number because they don't want the history of the old employer. They want to start afresh themselves. But if those employees are same employees, then we still have to count all the wages that they have earned and all of that. That information has to continue. So if it's a successor employer, we would indicate there no payments to employees during the year. So, and you see this one actually does, so 2022, it has one for each year. So if the company's still in existence and they've had employees in the past, but it's just that this year they didn't have any employees, then they could check that. So if that's checked, the IRS would expect to continue to get Form 940s because this isn't a final return. It's just we didn't have any last year. Final, business closed or stopped paying wages entirely, right? So they don't plan on paying wages again. Part 1. This is, so if you had to pay state unemployment tax in one state only, so you're only operating, let's say in Iowa, you put the state abbreviation there. So Iowa would be IA, right? Nebraska, NE, Minnesota, MN, right? So whatever, but that's only if you only operated in one state. If you operated in multiple states, you would check this box and then you have to fill out that Schedule A. If you paid wages in a state that is subject to the credit reduction, so they don't get that 5.4% credit, it's a lesser amount, you would check this box and you would have to fill out that Schedule A as well. So even if you only operate in one state, if that one state is subject to a credit reduction, you have to fill out Schedule A. If you operate in multiple states, you have to fill out Schedule A. If you operate in multiple states and one of them is subject to that credit reduction, you have to fill out Schedule A. Okay, so the only time you don't have to fill out Schedule A is if you only operate in one state and there's no credit reduction. Okay. Total payments to all employees. So this is going to be the total amount of wages that were paid that are subject to FUTA tax. And remember, we do have certain payments that aren't going to be subject to FUTA tax. Partners wouldn't be included in that if it's a partnership. Directors, some value of meals and lodging that are provided for the employer's convenience, that wouldn't be included there. These are just the wages that are subject to FUTA tax. Any payments that are included in that then are exempt from FUTA tax, so that we can separate those out here. And the type of payments that they are. So if it's some type of fringe benefits, so those pre-tax type payments, group term life insurance, you've got a couple problems in chapter 4 that include group term life insurance. Group term life insurance, the premiums that employers or employees have to pay tax on. They have to pay federal income tax on it, but it's not subject to FUTA tax, so it would be included in that. Retirement pension amounts, dependent care, or any other type. So they want to know, of those payments that are exempt, what are they? Total payments made to each employee in excess of $7,000. So this is kind of looking at it a little bit backwards. We're going to start with the total wages, and then we're going to subtract out everything that's over $7,000 for each employee. Right? When we were doing our problem on the board, we went up to $7,000. Now they're asking, okay, start with the total, subtract out everything that's over and above that. Okay, so what we're going to end up with here are just those wages that are subject to FUTA tax, so those up to $7,000 for each individual employee. Okay, so we're kind of, like I said, we're kind of working backwards there. Subtotal, total taxable FUTA wages. So we've got total FUTA wages, and then we've got total taxable FUTA wages as well. So subtotal here, we're going to add lines 4 and 5. Taxable wages, we're going to take line 3, which is our total wages, minus all those amounts that aren't subject to FUTA tax, to get what our taxable FUTA wages are. And then this is the tax before any adjustments. Now, we might not have any adjustments to make. But all you're doing here is taking the tax in line 7, multiplying it by 0.006. Remember, if we had a credit reduction, then we're going to do that calculation elsewhere. So this is not going to be 0.006, right? So but the form is set up so it's only those that are not subject to that credit reduction. Any adjustments? So if all of the taxable wages you paid were excluded from state unemployment tax, multiply line 7 by 0.054. What this is doing is one of these adjustments here is if any of the wages, any wages that are not subject to state unemployment tax, but that are subject to FUTA tax, don't get the credit reduction. So that again happens rarely, at least in my experience. I haven't seen that a whole lot, but that's what that's doing is then adding that back to it. If some were excluded from state unemployment tax, or you paid any of the state unemployment tax late, so remember, that's one of the things that will get you dinged as far as that credit reduction. Then there's a worksheet to figure out what we're adding to that, or how much of the credit reduction we're gonna take away. Okay, and then when you fill out that worksheet, enter that on line 10. So if the credit reduction applies, so you're receiving less of the credit, you're going to take the amount on Schedule A. Let's see, if you pay, and then down here, if you made prepayments, So you've got your total tax here, how much you deposited, and then how much you owe additionally, or if you overpaid. You've got the choice to apply it to the next return, so you can apply it to the future, or you can just get a refund. I will just tell you that for your own reference, getting a refund is much easier from an accounting perspective than trying to figure out going forward, okay, so we've got this credit, how do we do that? Especially if you're working with QuickBooks. QuickBooks doesn't like that stuff. It's kind of difficult to figure out if you've applied credits to future periods. So just my personal experience. All right. So if line 12 is more than $500, then they want information about how much was owed in each quarter, because they want to know, when did you hit that $500? So if you hit that $500 in the first quarter, but you're just paying all of it now, they've got a problem with that. There's going to be a penalty for it because you were supposed to pay it in the first quarter, right? So that's why they want that separated by quarter. Again, this has to equal line 12 up at the top, the total liability here, or the total Buddha tax. Okay, so just like with that form 941 where we've got the monthly schedule, that's got to match with what's on page 1. Same thing here. And that's it. Yeah.
So like for the 18 part, no, 16, my bad, 16. So you hit the 500 in the first quarter, you fill it out, and you pay it, right? You would need to turn that one in, right?
So if you hit that, you don't have to file, you never file this until January.
Okay.
Yeah. So that only pertains to the deposits.
Okay. So you only have to file it once. Mm-hmm. So like if you hit the 500 in the first and the third quarter.
So it's only whenever you first hit that 500 for the year.
Okay.
Then you have to pay what you owe every single quarter. If you never hit 500, then you don't have to pay it until you file this return. You can pay it once a year.
Okay.
Does that answer your question?
Yeah.
You sure?
No.
Okay, yeah, I was gonna say, you said a little.
So wait, so you do make your payments for the quarters if you hit the target?
If you hit that magic number.
But the report is just once a year?
Yes.
So no matter what, you still have to, like, if you hit that target, make your payments every quarter?
Right.
With no reporting?
No report. You just have to send the money in. And this is asking, how much did you send in and when did you send it in? In which quarter did you send it in?
So you could get a little bit in like the second quarter, but if you don't like pay it until the third quarter, and like you don't hit the 500 and you don't like pay it until the third quarter, you don't have to put anything in the second quarter?
Well, no, you would, well, yes, you're correct. So if you hit the 500 in the third quarter, you didn't make a payment in the first or second quarter because you didn't have to. So you'd have 0 here, 0 here, or actually this is your liability. Oh no, this is liability, I'm sorry. So how much did you owe here? They know what you deposited because they've got the records, right? So this is how much you owed. So this, if you didn't make a payment until the third quarter, these two amounts better be less than $500 total. Does that make sense?
So it's less of like when you pay it, like when you pay the 500, and more of like how close you are to the 500.
Yeah. So how much did you owe in each of these quarters? So for example, so let's just say first quarter 200. This is what we owed. Second quarter 350, 250, and 200. We would have made a payment at this point after the second quarter because we hit 500. And then in the third quarter, we have to make another payment because we've already hit 500 for the year. After you hit the 500, you have to pay it every quarter. Right. Once you hit that.
Every time you bill 500.
Right, right, exactly. So if we say, if this was 250. Now, we haven't hit the 500 in that second quarter, so we still don't have to pay anything, but in the third quarter, we're gonna have to make a payment, and in the fourth quarter, we're gonna have to make a payment. So once you hit that 500, you gotta pay every quarter.
So like, you hit the 500 in the third quarter. You pay 500 in the third quarter.
Well, you pay what you owe.
Okay.
If it's over so 500 would be the minimum, but 500 and above, you're gonna pay then what you owed for the whole year up to that point.
And then you would just pay the 200 in the fourth quarter?
Right.
Okay.
Right. So like if this was, so let's say this was 500. So we're gonna make a payment for this because we've hit the 500 for the year. And we're gonna make a payment in the second quarter and the third quarter and the fourth quarter because we're already over 500 for the year.
So the second quarter, you would pay $750?
$250, because we've already paid the 500. Just whatever we owe. Make sense?
Is there like a special like form that you have to fill in saying that you're paying that specifically?
So when you make the payments and you make them online, there is, and you make these payments online these days. There is a line in the electronic system where you can say what the payment is for. So you can break it down. You say, $300 of this was for federal income tax, federal income taxes withheld from employee paychecks, Social Security taxes, Medicare taxes, and then FUTA taxes. So you can say that in there. You don't have to put it in there, actually, because I mean, they can figure out how much each one is. But for record keeping purposes, it makes life a lot easier if you do separate that out.
And how do you keep track of that? Like, is something that the employer keeps track of, or the
Like once they meet,
yeah, like the how much you have to pay?
yeah, the employer has to keep track of that.
Okay.
Yep. Other questions? Great questions. Yeah, I know. Yeah.
For me, so the government give you like a time free to get 500.
Yes,
Yeah,
exactly.
you can pay if you not get 500 or after, so you
Yeah.
have time free.
Yeah. Yeah, once you get to that 500, then they want their money. Right.
So, yeah, I think the confusion is like, we didn't think you had to pay whatever was made before the 500.
Oh, yeah.
So it's like, you do have to pay it, but just until you hit the target.
Until you hit the 500, and then you pay, yeah, and then it's pay as you go, right? They give you that $500 grace amount. Yeah.
And that starts over the following year?
Yep, every year. Exactly. Okay.
If you only have like 400 annually, you don't care about.
Then you pay it. Well, you still have to pay it, but you've got time to pay it. You can pay it in January. Yeah. Yeah.
And if you have more than one state, you have to add them all up for that state.
Yeah.
According to the
Well,
state,
for
you have to
each,
go to-
well, and this is just the FUTA taxes. States don't do that.
Oh, okay.
The states, you pay it every quarter. Like, doesn't matter how much. It's probably going to be more than 500. As you saw, the tax rates are much higher for states. Yeah, so this is just for the federal taxes. Yep. Sure.
Is it possible to like get a little bit of this, but then like you get like $10 worth every quarter, so you don't have to pay it for like, well, you don't have to hit like, you don't hit the 500 for like years?
No, well, no, because that 500 is every year. So so we're talking about 500. So if you owe during 1 year, you owe less than $500 total for the whole year. You don't have to pay it until January 31st, but you do have to pay it January 31st
Of the following year?
of the following year, right?
Okay.
Yeah,
So like you can't just like wait until you get to the 500?
right.
You cannot just skip it.
Yeah. They at least, at a minimum, they want their money once a year. Other questions? Great questions, by the way. Let's see here. Where am I? I was going to show you the Schedule A. So this is And there's a voucher here if you're sending a payment in, which, I mean, the IRS always has that. So that's it. I mean, that's simpler than the 941, certainly. Signature down here, the preparer, as well as whoever the responsible party is. So let's look at the 940 Schedule A. Okay. All right. So Schedule A is really just to separate out each of the states, right? So identifying information up there, but they just want the EIN and the name of the company. They don't need the address and all that stuff. So place an X in the box of every state in which you had to pay state unemployment tax this year for each state with a credit reduction greater than 0. So if they've got, if the whole state's being dinged, enter the food and taxable wages, multiply it by the reduction rate, which you would have been given. Enter the credit reduction amount. Don't include the food and taxable wages, box wages that were included, that were excluded from state unemployment tax. So you have to go back and refer to where is it here? So like this here, because it's still going to be limited to the first 7,000. So you're not including the total wages. It's the food and taxable wages. But if it was in a state where there was a reduction, then we're going to have to enter that reduction amount. If there wasn't a reduction, then all you're doing is entering, saying, okay, we had Arizona and Delaware. And if we had total wages of taxable wages of $100,000 and $50,000, whoops, I can't even enter. It's not, I guess it's not fillable. For some reason I can put an X, but I can't. Oh, maybe can I do California? I can do California. Let's say it's California then. Food and taxable wages, 50,000. And we'll say Connecticut. These must be states that have had a credit reduction. Just to say how much was earned in each of those states. Okay. If there was a credit reduction, then we would put the amount of the reduction here, multiply this by the reduction rate, add the credit reduction there. Okay, and then that's going to get added to the tax because that additional amount then is now due because you're in a state that had a credit reduction. Maybe there are maybe there are. Let's see if we can see what states with credit reduction. Yep. So these states, I saw the list up there. Oh, here we go. California's back on the list. So these states, let me see if I can make this a bit bigger here. For 2022, the following 4 states and 1 jurisdiction were assessed as credit reduction states. California, again, Connecticut, Illinois, New York, and then the Virgin Islands as well. So that's why this part is fillable. Yeah.
Does all company has a different reduction rate?
Each state would have they might have a different reduction rate. Each state, that's why you have to separate it out. So maybe California had a 0.01 and Connecticut had a 0.02.
What's Iowa?
Iowa doesn't have a credit reduction. Yeah, because we've made all of or maybe we didn't borrow any from the federal unemployment.
So that has to do with that and not because of, like, the states are expensive to live or?
Because the states are in arrears on their payments to the federal unemployment agency. So they're slow with payments, or they haven't made their payments. Yeah. Probably these are the same states that have deficits. Iowa doesn't have a deficit. But that's kind of interesting. Because I hadn't looked that up for a while. After what
I
COVID.
would believe that Florida would be in that category.
What's
For
that?
some reason.
What's that?
Florida.
Florida's not on that list because they wouldn't, and I'm just saying that if they're one of those states that is in arrears on these payments, chances are they're running a deficit, but not necessarily all states that are running a deficit would also be in arrears on these payments. Does that make sense? I'm making an assumption. But if you can't pay that back, then probably you don't have the money to pay it back, so. It'll be interesting actually to kind of pay attention in the next few years. I wonder, let's see what it was in 2021. Just out of curiosity.
And they're expensive states to live in, so it's gonna be.
They also have high taxes.
Mhm.
So it changes every year?
Which state? It's not listing it. That was kind of still during COVID, so maybe they were giving people a break. Just a break. 2020. Historical.
And that would have been before COVID, which is like 2018.
2018 would have been, let's see. This is just me being curious. Credit reductions. There had been a lot of chatter about the US dollar. Losing its value, will the rates be changed accordingly? No, I mean, this rate, so the tax rate itself is set by statute. So Congress would have to change the rate. And the credit reduction amounts have to do with repayments by the states, whether they've made their payments on time. So it wouldn't really have a bearing, that wouldn't really have a bearing on any of this. Now, that's not to say that Congress might not decide to increase the unemployment tax rate. They could. It's been this rate since I've been working in the accounting field, so long time. Let's see. No, it doesn't say. All right, well, I'll stop playing around. It'd be kind of interesting to see over the years which states. All right. So we already kind of went over this deposit quarterly, but only if it's cumulatively for the year over 500. Employer has to pay before the last day of the month following the end of the quarter. So March 31st, those payments would be due by April 30th. Okay. If it's 500 or less, the employer can wait and add it to the next quarter. If the tax liability never gets over 500, you pay it at the end of the year. I showed you that voucher, which is called a 940V. Anytime you see a V on something, it means it's a payment voucher. It just means it goes along with the payment. That's what you send in. There are civil and criminal penalties for failing to file the 940, for not paying the taxes when they're due, or not making timely deposits as well. Usually, if you get dinged with one penalty, they can usually ding you with more than one penalty, with multiple, and then they'll add interest onto it as well. So there are, that's for that. Okay, SUDA forms. Let me see if I can find the Iowa one. Sometimes it's been hard for me to find this in the past, but I do eventually get to it. Iowa, they don't, I don't know that you can even mail it in anymore. It's all done online, but I'd like to see the form. Let's see, do I have it in here? Oh, shoot. That's something I should just attach in. Once I find it, I need to attach it in Blackboard. Let's see. Oh my goodness. Okay, so here's an image. So you can see what it looks like. I can make this bigger.
That's the one I found, but I wasn't sure if it was that one.
Is this one? Or
That's the one I
yeah,
found.
they're really, open in a new tab. No. All right. Here we go. It's bigger. That's not the one I want though. That's an old one. It's old. Yeah, that's from 2006. I don't want that one. blurry. Not great. But this is what the Iowa one looks like. So all of identifying information up here, total wages, and then taxable wages, the taxable wage base. Now, employers will usually get these, like, well, back in the day when you would get a printed copy that you would mail in, you would get all 4 quarters of these mailed to you at the end of the year to use for the next year. And it would tell you what your taxable wage base is. I'm sorry that's so blurry. Let's see if I can't find a better one here. Here we go. This one's better. That's better. Okay, so you'd have your account number up here, which you would, when you start a new business, you apply for these accounts. Which quarter it is, first, second, third, or fourth, and what year you're filing it for. All the employer's identification number or employer information here. FEIN is Federal Employer Identification Number. You have a state, there is a state ID number as well that is separate that you use when you're filing payroll in Iowa, but they want the federal number on this form. That's how they identify you. Then total wages, taxable wage base. So whatever that is this year, which was what, 34,800, something like that, 34,300, I can't remember what it was. Experience rate here. So all of this would already be filled out. You would already know it. And if you're filing this online, obviously that information is already there and it's going to do all of the calculations automatically for you. Now, page 2 is where you list each individual employee. And remember, we need to know that because it's only the first 34,000, whatever that wage base is, of wages that are subject to unemployment tax in Iowa, right? So we've got to keep track of each employee. Now, another way that the workforce development will gain this information is there are ways to upload. So if you've got like hundreds of employees, right, you don't want to have to type everybody out individually. You can upload a report to them to show all of the wages. Total wages paid, so everything, and then the taxable wages paid. So if that amount is still within the taxable range, that's what would be entered there. So all of the employees are all added up here. They also want some additional labor market information. How many workers did you have on each of the months that included the 12th of the month? So kind of like similar to that question on the 941, but that one's on a quarterly basis. This is every month they want to know. How much did you pay in bonuses, executive pay, severance pay, anything over and above the usual? They want to know that. And this is just for data collection, really. It doesn't, they compile all of it together to see the, you know, if employers are adding jobs, if they're taking, you know, subtracting jobs, that sort of thing. If the number of workers increased or decreased, why? They want to know why. I mean, significantly, really. If there's a seasonal change, strike, layoff, recall, worksite opening, worksite closing, that sort of thing. You just want to know why. And so if you were doing this manually, you might have multiple pages of this if you've got more than 15 employees. But you do have to, so you've got to be specific to each employee here. And then all those totals for this page would go over here. So total wages would be this first column, taxable wages, this column. So you would, even if you only have one employee, you'd still have to fill this second page out because you've got to have information about that one employee.
Is there a form number?
It is Form 65-5300. And I'm gonna actually put a link to this. I can. Let's see. So I'll put a link to that up on Blackboard as well, so you can take a look at it. Like I said, all that stuff is really done online nowadays. Here. So I have put that up on Blackboard, if you want to look at it. So it's under the Resources tab in Chapter 5. Some history. If you're interested in the history of the federal unemployment system, I'll link there. And a little light reading for you if you want to read a little bit more detail about it. All right. So that's the Iowa report. So I'm not going to go through all that because I just went through most of it. So sometimes employees, even if if they have their hours cut, they can sometimes also qualify for unemployment benefits as well. So they went from full-time to part-time.
I heard on my cousin's job site, they do the same for like winter, since they do roofing, like commercial roofing. And they do like the winter unemployment for the people that wants to do it.
Yep. I think there are, I don't know if they do it here. I remember when I worked in Arizona, we would have teachers that would apply for unemployment during the summer months as well, since they looked at it as like, I don't know if they still can do that, because I suppose it just depends on how they're getting paid, if they're getting paid for, all 12 months, or if they're only being paid for 9 months. But I know that has happened as well in the past. So certain, even just, seasonal employment, that's just the nature of the job. But yeah, you're right. Construction industry, that happens a lot, where they get laid off for a while, and so they go apply for unemployment. And the rate is so high already. I mean, the construction industry is probably already paying the highest rate, so it doesn't really affect their rate. It won't go up any higher. So yeah, go get some unemployment while you're off. There are record retention requirements, of course. See what else we want. I think that's it. Yes, so this is just our summary for the chapter. And that is it on federal unemployment tax. or a day early. Questions. So we've got like 20 minutes left. Homework questions, I know, chapter 4 or chapter 5. Or anybody out there as well? Are y'all thinking, or did you get your?
She said it could take 2 days before I can get into homework.
Okay. Why, what's wrong? Did she say what was wrong?
No, she said it was above her level, whatever it is, so she's escalated it. So I'll have questions in 2 days.
Okay.
Next
Yeah.
class.
Yeah. Well, Lisa she didn't get my message about extending the homework, and so she submitted on Tuesday her homework, even though it
The one
wasn't.
that was due for the 4th?
Yeah.
Oh, I didn't finish it on time, so I submitted whatever I had.
Oh, you did? So you probably, let me see if
It was
I,
during the storm when I did it, because my lights went off.
right,
when
yeah, I had sent out,
did
did everybody else get that message?
it. Yeah, I never seen it.
Yeah, okay.
I just didn't check.
Oh, okay, yeah, that night, I don't know about you guys, in Ames, it didn't turn out to be quite as bad as, it wasn't as bad as Friday. Friday was really bad, the earlier one. So, but I know that I've got students all over the state, so I don't know what. And I've had students before that, it's during a storm, they're like, my electricity went out. So I thought, I will just nip that in the bud right now and just give everybody an extension, and that will take care of it. So if you want me to try and reopen yours, here's the issue. We did this with Lisa, and now somehow her system is locked, and she can't,
I can't do anything.
but I can try and open it.
Don't they have like a multiple retakes, or you don't?
But if you already submitted it, no. Like you can, when you're in
I know
the,
the assessment don't let you do it again, but the homework, it has, you can have a retake or something like that.
so each of I thought it was just like within each problem, you could do it again. But like once you hit submit, I think it's submitted.
Okay, I have.
So I'm happy to try. If you want me to try it or not.
And the assessment too.
Yeah, Tammy, go ahead.
Yeah, I've had that too, where I've submitted and I accidentally missed one because I didn't see it. And they've let me go back in, look at the question, redo it, and then resubmit it.
Maybe if the deadline hasn't arrived yet.
Let me check, let me see.
Yeah.
If
I would imagine that.
Because it says there's sometimes like retake,
Yeah,
Right,
so I don't, let me just. see.
okay.
I think so.
And maybe that was our problem.
But you extended the deadline, so
Mhm.
I don't know. But like I said, my lights were flickering off. My TV had already gone off.
Mhm.
And then the lights started flickering, so I just said, here, send. So,
Well, it says unlimited submissions allowed.
I'm sorry?
It says unlimited submissions allowed.
Oh, unlimited, okay, unlimited submissions. All right,
So you can retake if it says unlimited.
no, there you go, probably until the deadline.
Yeah.
And then, okay,
Yeah, I have a retake.
You can get in?
resume.
okay.
Retake or
Well, maybe
resume.
maybe I shouldn't have done that. I didn't realize it. Maybe that's what messed it up.
well, she said for me, don't even go in there, just don't touch it at all.
Okay,
So I'm scared to even show you the questions. Well, maybe I can look at yours and see that, or you might be able still, well, I don't know if you should get into mine either.
yeah,
She said, don't even touch it, just do everything else.
32.
32 on chapter 4?
Yeah.
Okay.
I can't get the 2,200 total earnings one figured out.
Let's see, so number 32. And, no, there it is. And I might have different numbers than you. So. Is this a problem?
Yeah.
Okay, so what do we have here? Hogan Thrift Shop, payroll register, employees are paid weekly. Filing status is shown on the payroll register, as well as each employee's weekly salary, which has remained the same all year. Complete the payroll register for the payroll ending December 20th, 51st weekly payday. State income tax rate is 2% of total earnings. City income tax rate is 1.5% of total gross earnings. Okay, so total earnings and total gross earnings. I'm going to make a mental note of that. Wage bracket method used. So we get to use the tables. Enter all amounts as positive, round your calculations to the nearest cent. If an amount is 0, enter 0. All right, so you said there was one in particular you were having an issue with on these, or all of
Yeah,
them?
the first one, Matthew John.
Matthew John. Okay, so these are weekly earnings, and it's the 51st. So how much was he earned? Ooh. Oh, we're over 147,000 in this payroll. We're over by $900. So his Social Security, he's only going to have Social Security based on $2,000 of that, right? So this is the 51st pay. Did you see what I did there? So 2,900 times
That was my
51.
issue with few of them to get like the first total because I was missing that.
Yep, so he only 2,000, because he's 900, he exceeded the 47,000 by $900 this pay period. So only 2,000 of this is going to be subject to Social Security tax.
Yeah.
Okay? Is it,
124.
what's that?
124.
124?
So do we always check for like the yearly
You'd want to.
pay?
Yeah, like on the rest of them though, they haven't reached it because he's
But
the
if you
only.
go over like the thousands or so, like just make sure that they don't go over the.
Right, like if we had another employee here that was making $3,000, then you'd know, okay, well, he or she is also exceeded, then you'd have to do it. But like these other ones, 270, they're not coming close. So yeah, so there's a 124.
Health insurance is 4,205.
Oh, he's got health insurance?
Yeah.
Yes. 4205.
Where do you see that? Where is that? Oh, sorry.
It's a.
Okay, so then we've got to take that into account.
I think it's just a normal health insurance rate.
Okay, why am I missing that? So if he pays an amount toward health insurance, you've got to take that into account as well. You would subtract that from his $2,000 before figuring FICA tax and federal income tax, but probably not state income tax because they're saying it's based on total income. Am I missing it?
It's
I
just,
don't see the help.
no. It doesn't say it up in the, like up there. It's just that the rate that we were taught, I multiplied it by that and it got.
Oh, I'm sorry. You're saying health insurance. See, this is where the HI versus MC comes in. I'm thinking health insurance, like if you're like a pre-tax health insurance plan, it's the the Medicare. Gotcha. Yeah. So yes, that's based on the entire amount.
Yeah.
The 2,900. Yep. Yep. And then the federal income tax is based on the full amount. and state and city.
I think most of them just for that one that says 124, because I had the problem with other problems. It's just that one part that went over
Gotcha. Gotcha.
the amount.
So does that answer your question, Ben?
I'm trying to figure out the federal income.
Oh, okay. So that's going to be based on the full 2,900. Other questions?
Can we go over? I think it's 36.
Is this the one with gross pay, HSA contributions, 401k? Okay. So this is number 36. We've got Julie White-Weller. Let me see if I can make this a little bigger too, because I know that's hard for everybody out there to see. Judy White-Wheeler made $930 this week. Only Social Security and federal income taxes attached to her pay. That wording is weird. White-Weiler contributes $100 each week to the 401k, has $25 put into her health savings account, non-qualified each week. Her employer matches this $25 each week. Determine her take-home pay if she is single. All right, so a couple things that could make this a bit more complex. This non-qualified part. There's something else there. I think it was the attaches to her pay part that. Okay. Enter deductions with a minus sign. So that might be one too. Minus sign. Don't forget the minus sign. Round your calculations to the nearest cent. All right. 930 gross pay. That's pretty easy. Okay.
I got the OASI and I got the HI tax. I got those.
So we got this is just the flat 100.
25.
HSA 25.
Yeah. Minus.
Oh, you are right. See, here I am making a point and.
Only not minus is 930.
Federal income tax 66.
Okay. So federal income tax 56, how did you get that?
Because here in the course, we tell everybody you don't have to put data. Let me forget this one. Retirement.
Yes.
Because
So-
you take on 930 minus 100, and then you can go in the bracket, and then you can find.
Okay, so 930 minus, not minus the 25 though,
No.
because it's non-qualified. Right. So it's just $830 but for this Social Security and Medicare tax, we're not subtracting anything.
Yeah.
It's based on the $930.
So that one is 5766.
5766? Okay,
The next one is 1349.
okay,
And I think the one I was missing is that one.
all right. So that's gonna be based on $830.
That was my issue.
Yep, and that was the key here, where it says non-qualified. You just have to put those little tricks in there. They're sneaky, like that. So yeah, the federal income tax is gonna be based on 830. Wage bracket method, she is single. And we are assuming, we always assume that there's no checkbox, right? Let's see. For this edition, the 22 manual systems. Oh, it's gonna be that really tiny print that I can't see. Yeah. Right. So 8:30. That's married. Now I can't remember which line.
Yeah.
Second one,
66.
66. Oh, minus, whoops. Minus, 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 minus. So we do the math. 5 minus 100, minus 57.66, minus 13.49, minus 6. 67.85. Whee! Does everybody understand how we got that?
Adding up everything.
100?
Yeah.
It says up here in the problem, she contributes $100 each week to her 401k. But the $25 into the health savings account is non-qualified, which means it is not pre-tax. So it doesn't reduce her taxable income. So that's why we're not using that in our calculation. So we're taking the 930. Minus 100. This is what's taxable for federal income tax. But for Social Security, we're not going to subtract anything. So Social Security, Medicare, it's based on the $930. And again, so if that had been a qualified HSA contribution, it would have reduced federal income tax and Social Security and Medicare tax. But because it was non-qualified, we're not subtracting anything. Other questions? My hair is falling out. Okay. How about any online students, questions? No? Okay, well, I'll stick around until about 1:15. It is 12:40. Exactly. You're getting out on time. Have a great weekend. Happy Easter if you celebrate Easter. Weather's supposed to be absolutely gorgeous. It's about time.
Like how many years?
I know. It's supposed to be, let's see, mid-60s and sunny this weekend and then 70s and sunny next week. I put my patio furniture out. I was so excited.
Oh, we need to clean the yard.
Yeah. Oh, my yard's a mess. We have a dog, and so. And I get to, now that the snow is gone, I can see how many holes he's dug up in the winter, and he's been busy.
It's the stress of being inside in the winter.
Yeah.
I have mine. He's little, but
Yeah.
every time he goes outside, he just makes holes. he plays with rocks, so he doesn't have toys, he has rocks. So every time he grabs a rock, he throws it, and then he grabs it, and then he throws it, and he grabs it. We buy toys, and it's like, come on,
It's like kids with the boxes. They, yeah.
And that's what my friend says. Like it's like your kids when they were playing with your dishware and stuff. Like they will grab like
Yeah.
random things like the Tupperwares and lids and stuff.
Yep, exactly. No point in buying the toys. What kind of dog is he?
Shih Tzu.
Shih Tzu. We've got a golden retriever, so he's just turned 2.
So just one chapter to go.
Say that again?
So just one chapter to finish.
There's one chapter left, yeah. So I'll start going over, well, we'll have time again on next Tuesday for our homework questions on, again, chapter 4 is not due, but chapter 4 assessment's still due next Tuesday, so be careful. But I'll go over chapter 4 homework or chapter 5 homework, and then we can start on chapter 6 as well. So we're a little bit ahead of schedule.
And it's long, the chapter 6 or?
Well, it's not necessarily, but we kind of change gears because now we're getting into journal entries. So I got to kind of switch our minds a little bit, our brains around.
Like the fixing and
Well, so like
just the
accruals and, yeah. So the journal entries that we use for recording all of the payroll transactions. Yeah, so obviously payroll is an expense. Payroll taxes are an expense, but when we are withholding taxes from employees' paychecks, and we're not sending, well, it's a payable. So, because we have to pay it out to the IRS at some later time. And then we've got end of period adjustments as well, because our payroll periods don't always match up, and actually usually don't match up with our accounting cycle. So you might have a payroll period that spans the end of the accounting cycle. So like say, it goes from, our payroll periods from December 24th to January 7th. And we've got employees that worked from December 24th to December 31st, and we've got to accrue that because it's an expense for accounting purposes. So we've got to record that in the accounting records, but we haven't paid them yet. So that sort of stuff. Yep. Fun stuff.
yeah.
But we've got a little extra time to work on it too.
We had a little bit of input on the QuickBooks class, but I
Yeah.
don't think it was on the payroll level.
Yeah, and I think, does intro to accounting go over payroll?
Yeah,
Are we taking
we
that?
just started a payroll.
Perfect timing.
Not us.
Yeah.
We know much about it.
Yeah, and I think, does accounting cycle? Anybody who's taken accounting cycle?
I took it last semester.
Okay, does it do anything with payroll, like entries?
I don't know, payroll for accrued things.
Yeah, okay, so it's fresh in your mind too. All right. Are you staying? Are you
Yes,
good? Okay,
I'm just standing up for a while to
Yeah,
get my
sure.
legs to.
absolutely.
Quick question. So yesterday I got kind of offered and thought about HR to see if I wanted to apply.
Uh-huh.
Do you think it's a good idea for like practice stuff?
I mean, if you're interested in tax, then yeah, it's great. It's a great experience.
Okay.
Yeah.
I don't know yet. Maybe she just said, oh, you want to try it out and see? I was
Yeah.
coming to school. She said, you want to try it out? They can probably pay for like the rest of
Mm-hmm.
the stuff that you need. You don't need certificate or anything here until you actually get certified.
Yeah. So it's kind of weird that it's the end of tax season. So
I think that they have programs like the certification during the year, so
Mhm.
that's why, so I can get started, because I told her I was gonna be over this certificate this year,
Mhm.
and I didn't wanna I'm doing part-time working part-time and then going to school part-time, and then I have a little side hustle that I'm gonna start, or I'm starting, some baked good stuff. So I told her, you know, my time is kind of limited, so
Right.
what's your schedule? And they're like, they're flexible, it's
Mhm.
only like 3-4 months, and
Oh, wow.
you can actually do, if you want to work on November too, sometimes you can do that, but
Yeah.
it's a very flexible schedule, and if you want to have the experience on some taxes or
Yeah.
that field, they probably can.
Yeah. I mean, it'll be good. It'll good experience when you take, are you in the specialist program as well here? Like, are you going to take income tax accounting? Oh, okay.
So I'm in the, it's a small accounting for entrepreneurs.
Okay, yeah,
So
the
it's-
certificate, yeah.
Yeah, the certificate. And then I found out that I could have done like an accounting certificate. It was like later. when I was
Yeah,
already
accounting
in
and
it.
bookkeeping certificate, yeah.
So then I was like, okay, like either I try that or go for the CPA later on.
Mhm.
But I'm gonna go very slow because since I have
Sure, yeah, get a lot of
a
stuff going
lot of
on.
stuff going
Yeah.
on, and then kids, and then
Yep.
in the house. So it's like, I don't want to go, you know, too
Right.
crazy.
Right,
And I want to balance my life. I don't want to, you know,
Yep.
not be there for my kids because I'm
Yep.
a very jealous person about that time.
yeah,
So then I say, okay, then I'll just do the certificate, and then there's another small, like just accounting certificate,
there's the accounting and bookkeeping certificate, and then there's also the payroll
which is like
certificate.
fewer credits. And then I was like, okay, I'll be done with this one, then I'll try the other one, and then later on, like little by little, try
Right.
to
Right, by
work
the
up
end of
to
it, you'll have
by
the
my
specialist.
retirement. I'll be happy.
Yeah, yeah,
So-
but yeah, I mean, I think if you're interested in tax, yeah, that's a great experience. Yeah.
Because my goal is like the CPA,
Mhm.
hopefully a future goal.
Good.
But right now it's like, okay, I gotta just work with what I have. So
Right.
it's like, I cannot just limit myself to,
Right,
you know, one thing.
absolutely. And
the
if you
knowledge
find,
is what I want to have, so.
yeah, and if you find that you really like the income tax and like that's what you want to focus on, the other option is becoming an enrolled agent, which the CPA is great, and it's something I mean, I never regret getting my CPA license. But if for those who are like just interested in tax, the enrolled agent is a specialization that it doesn't require a bachelor's degree to sit for the exam. It's administered by the IRS. And a lot of people will, you know, they start their own business, their own tax business.
So you can be your own
Yeah. Mhm.
business owner by just doing that.
Yeah.
Oh, I like that.
Yeah, so you might want to, it's something you might want to look at. Like I said, it doesn't require as much educational background because it's overly specialized in tax.
I know there's a
but-
little gap there for my community
Mhm.
and that.
Yeah.
So that's why I was trying to see, like, okay, like, if I go to like for the CPA and then have like a whole, you know, thing going on there for,
Right,
you know, bilingual.
yep, oh yeah,
And
absolutely.
then, you know, there's a need, and there's people get scared to go places just because they don't have,
Right,
because they have the barrier.
right, exactly,
So, I wanted to try crazy.
absolutely, absolutely.
Okay.
Yeah, and I one thing that I've noticed too are those who are underrepresented. When they get, a lot of times when they get their taxes done, they'll go to places that aren't very reputable, and and it's not done
They
right.
have people that do themselves for themselves.
Yeah,
And,
and they can get themselves
into
into real trouble by doing that. And so if they got someone to turn to that they can
I
trust.
work with an attorney, and it's just like, you know what, like, go for it.
Mhm.
Like, there's a need, go for it
Absolutely.
and make it yours.
Absolutely.
I'll help you. And I'm like, okay, thank you. I need the money. Okay, I can't help you that way.
Yeah.
but Of course. you
Moral
can.
support.
I'll be there with connections. I'm like, okay, thank you.
Yeah, absolutely. Attorneys are good connections too
Yes.
for that work. Yep.
Thank you.
Great. Yeah, you're welcome. Have a good weekend. Yes.
34.
34. And I know you've got,
No, we're not.
you're okay? Okay. Okay. Oh, I can. I'll go ahead and I'll keep recording this and I'll put it up just in case. Oh, grossing up. Okay. All right. So Damerly Company in Utah wants to give a holiday bonus check, $250 to each employee. Sorry, I don't know what that is. Since it wants the check to be $250, it will need to gross up the amount of the bonus, calculate withholding taxes on the gross amount of the bonus, made to John Rowland. His cumulative earnings for the year are $46,910. Besides being subject to Social Security tax, 4.9% Utah tax rate must be withheld on supplemental payments as well. All right, so we're going to use that formula, which is, again, up here. So the amount of the bonus is our numerator. The amount of the check that we want to issue is our numerator, so 250. And in this problem, I don't think, like, his gross pay doesn't really, I mean, his annual pay doesn't really matter in this problem. But we're going to take 1 minus that supplemental rate, 0.22.
Is it that supplemental rate or is it the rate that they said it in the problem?
So there's 2. This is the federal, but we're also going to have to subtract the state.
Okay.
Yeah. So minus 0.22 minus 0.062 minus 0.0145 minus 0.0495 is 4.95, right? Yeah. So 1 minus all of those.
382, 526.
How much?
382.
This is all 382?
No, all.
The whole equation.
Oh, okay. Okay. Well, let's go step by step first, though. So 0.22. So 3, did I do that right? Let me do that again. I don't know if I hit something wrong. Let's see, right. 22 minus 0.62 minus 0.0495. I did something wrong that time too. Okay, 0.22 plus, because I subtracted 0.062 plus 0.01 plus 0.0495. So, okay, 3 minus 1. So this is 0.654. So 250 divided by 0.654. And this is our gross amount. So 382.26. But they don't want just that number. They want to know how much then Social Security tax, how much federal income tax, and all of that stuff is going to be withheld. So 6. Can you do all that? So all you're going to do is multiply the 382.26 by the tax rates.
And keep the minus in front.
Yep.
Yep. Does it come out exactly, or is there 6 times point? So this is 8410. $370.
So the federal income tax is the multiplying the whole thing by the 22%?
Yep.
Okay.
$1,892. So you do have to do the math just in case you've got to adjust the gross amount.
And you just like add a penny or subtract a penny?
If you were, yeah, if this didn't come out exactly to two, like if it was 249.99,
Right.
then we would make this 382.27. Okay. All right, other questions? You still have chapter 5 questions?
Yeah.
Okay, let's look at chapter 5. So. What number?
54.
So total payments, California, Arizona. So yes. So I'm just wondering if they're doing the credit reduction for California here. Arizona, California. All right, well. So what part did you, all of it?
So maybe all because I do something I don't
Okay,
understand.
you're not quite sure. Okay, so
Yeah.
we
Last
are,
one.
none of these. Go, multiple states, so we're not gonna do that. Sorry. Okay. So total payments to all employees, 120,800.
Yeah.
Payments exempt from FUTA tax, 3,500. Retirement pension. Total payments made to each employee in excess of 7,000. So 36,500. Subtotal, add these two together. Oh, isn't that convenient? 40,000. So total taxable. Let me make sure I got this right. So 80,800. Times 0.006. For 484.80. Okay, we don't need to fill that out. Adjustments, 484.80. Put a tax deposited for the year. Okay, so, oh, none. We haven't deposited anything. Yeah, so 484.80. And then first quarter, let's see, what is this? 220.10, 107.60. $101 and 56.10. To log into office hours. Hold on. In case there's anybody online. So add all those up. 484. Is that, did it come to 484.80? We good? Don't forget this. Where is they no, I guess. And then we've got to enter the amount of wages in Arizona. Which was 18,490, no. So 11,490, or do we have total and taxable on there? I can't remember. Food and taxable, okay. So it's 11,490 for Arizona. No, sorry. Payments made in excess, oh, no. So 11,490 were in excess, that means 18,490 were taxable. So what, 7,000? And the rest would be California. It should be, what, 63,800? And then we can, no, why did I not do that? Okay. Is there a credit reduction?
This one, I don't understand why it's not going through.
Let's see. Well, I'm wondering if California has a credit reduction. But I don't see it. Oh, wait a minute. Oh, no, that's the liability. That's right. Let's see. Are there two parts to this problem?
Yeah, so, I mean, it's maybe different. Yeah. That's what I want to explain to me is here 56.10 plus the credit reduction. This one, what does mean? I want to understand because I don't understand these things.
So
Everything's
all of
correct.
these are right.
This one's going to be white. So
Why is that not right?
Yeah, I don't understand.
Okay, well, let's see here then. Hold on, let me. What number was that again? 56?
Oh, 54.
Oh, okay.
I'm looking at the points, what does that mean?
You only enter this in if it was more than 500. If not, you don't enter it in.
Oh.
You enter nothing here. And I guess,
Oh.
You can check mark Arizona and California, but nothing, don't add it.
oh, we don't have to enter the wages because there's no credit reduction.
Oh, yeah.
Okay.
Is there a way for our homework problems to have those check marks when they're empty like that? Because like when you're filling out those forms and you don't have anything, or if you do have anything, it'll show up as nothing. So you don't know if you're supposed to put anything in there or not. Does that make sense?
Mm-hmm.
So is there a way for in the homework problems when we check it to get an X, like there's supposed to be something in there, or a check mark, like you got the right thing in there?
Let me see. I don't know if there is or not. But does that make sense?
No,
Because it's
yeah,
okay, yeah. Trip to be up to, let's see. Don't see that there is. Let's see. I don't see that there is.
Okay, that's fine.
Sorry.
Oh, that's good. I do have another question for chapter 4, question 50.
Okay, so is it one employee in particular or?
So for the first one, I took the 610 minus the 893 for the percentage method. I went through that. I got 125.54. What do I do with the allowance in order
So
to like have it taken if I
using the percentage method, are we? Okay, so this is the old method, right? Okay, so
It's 115.46.
yeah, so, okay, so they're paid weekly. So 4 allowances, married,
Oh, I'm sorry, what number is this?
50.
50?
Mhm.
okay. So weekly is 83, so we're gonna take 83 times 4. So is it 610? 1610
Yeah, 1610.
a week, 4 allowances. So we're gonna take the 4 times 83, number of allowances times
332.
332. And we're gonna take the 1610 minus the 332. What'd you get?
1278.
1278. That's the amount we're gonna apply to the table.
Oh.
Percentage method table here. Really hard to see, I know. Let's see. So we are weekly, married. Wait a minute.
Yeah, it's the top one.
This is the wrong one. This says 2020 or later.
Yeah, that's the one that the problem gives us.
This is the wrong table.
Oh.
Because it says it's for 20, if we're using allowances, we're not going to use, it's 2020 or earlier.
So
So,
2019 or earlier, right?
yeah,
Or
let's see.
before 2020.
Or later, we got to get the right table.
Well, then that might be my problem too. I just looked at the table they gave me.
Here we go. This is the one we want.
Is it the following page?
2 pages over. So table C.
Okay. Well, it was 12.
So married, weekly, we're going to use, so 1278 minus 645.
633.
633?
Yeah.
Okay, so I know this is kind of hard to see, but 645, so 12% of the amount, 3950 plus 12% of this amount. So times 12%, what did I say, 3950? So 633 times 12%,
75.96.
75.96. So we're going to add that 75, 6 to that, 6, 4, 5, 115.46. Does that work?
Yeah. Do we have to do all the problems based off of table C? Even though
You've
there's
got to
no-
read the question.
Okay.
Yeah, it's going to be in the problem.
I was going to say for the zero.
Well, all of these, yes.
Oh, yeah, okay.
All of these. This problem, yes.
Yeah, that's what I meant.
So, but each question may be different.
I just didn't know if that zero amount meant that we could do either.
Oh, no. Yeah, it's anytime you see where if it ever says allowance, it's going to be the earlier method.
Is it just like not, does the 2020 and later just like not care about the allowances?
There aren't allowances
Okay.
for that. Yeah. They completely did away with the allowances and have this new method.
Is there any so any of the benefit that you got from those allowances are just gone now?
Yeah, there are different factors now. I mean,
Okay.
yeah. So now we've got that checkbox. We've got the different filing statuses, which before we just had married or single. So it's just, two of the factors are the same, but two of the factors now that we need are different between those two. Yeah.
That's what got me up. The fact that they gave me the wrong, and I figured, I was like, well.
And it's just taking you to the beginning of those tables. Like
See, I did not realize.
yeah, you gotta scroll through to find the right table. Mhm. Yep, but I know as painful as it is though, those little things help to solidify the information in your head. I mean, it really does. I know it's uncomfortable, but discomfort is what helps us to learn.
No, now I'm thinking about all of the time, it was squishy in my head because I wasn't getting the right answer and I got frustrated.
Yep.
And now I can't get in my work. And it's like, because I said, I know how to, and now it's like.
Well, I'm recording this, so I'll post it. So if you need a reminder, it's at the end of this recording. So.
I don't know if you have time.
Yeah, how about one more? What you got?
How about 34?
Chapter 5?
Yeah.
34?
Yeah.
All right. Suda and Buddha. Okay, so in September, Manson Pate Corporation began operations in a state that requires new employers of one or more individuals to pay a state unemployment tax of 3.5% of the first $7,000 of wages. An analysis of the company's payroll for the year shows the total wages paid of $177,610. Salaries of the president and vice president, those are directors, of the company were $20,000 and $15,000 respectively for the 4-month period, but there were no other employees who received wages in excess of $7,000 for the 4 months. Included in the total wages were $900 paid to a director who only attended director meetings during the year. Okay, so vice president, okay. 6,300 paid to the factory superintendent, that counts. 2,000 in employee contributions to a cafeteria plan made on a pre-tax basis for both federal and state. Okay, so the director, those wages do not get included. The $2,000, because it's on a pre-tax basis, that doesn't get included. In addition, a payment of $24.30 was made to Anderson Accounting Company for an audit performed on the company. That doesn't really do anything. Net food tax. All right, so 177,610. And again, so this is chapter 5, number 36. So we're going to start with the gross wages of 177,610. Okay, so only 7,000 of that and 7,000 of that would be taxable. So we can subtract what, 13,000 and 8,000. So minus 20, 13 and 8, 21,000. These are salaries in excess of 7,000. $900 director. That doesn't get included. Pre-tax 2,000. Section 125. This doesn't matter. 177. 177,610. Minus 153,710. 06. And 2226. Let me make sure I got that right. 922. Please be right. Yay. Suda tax, 3.5% on the same amount. So 153,710 times 0.035. $379.85. You're welcome. Yeah.
So here you put 3, it's would be 5.
What's that?
It's 5.
3379. Oh, 30. Oh, 53. Oh.
Yeah.
Great. All right. I'm going to head out. We'll have more time on Tuesday. Okay.
I'll let you know when I can get in.
Okay. I do have company coming this weekend, so over the weekend is